Casey got a new house.
Okay, hello everyone. We're just going to give it about 3 minutes until it's time to start. In the meanwhile, you'll see that you're muted, but you can go to the Q&A at the top and you can enter in any questions that you have, and we'll be sure to address them throughout the presentation.
Hey, can you guys close my door?
And we are recording this presentation, just so everybody knows, so we'll provide that to you after in case you want to rewatch it, but just so you know, this will be recorded. Okay, it's 11 o'clock right now. We'll just give it one more moment until we start. That way the people who are putting the password in are able to sign on. Let's go ahead and get started so we can start on time. Thank you so much for joining us today. We're super excited to have you. We have 3 panelists from Smith Marion & Company on today, and they're going to be answering your questions about PHA CARES funds. If you have any questions at all, just submit them in the chat, or you can submit them in the Q&A, and we will get to those. Today we have with us Chad Porter. He's a CPA, a CFE, and the CEO. We have Douglas Engelhardt. He's MSA CPA and one of our principals. And we have Casey Martin, one of our audit supervisors. And I'm Hannah Baldwin. I'll be facilitating today. I just hand that over to you, Chad.
Okay. We're going to kind of do this round robin between me and Doug. Casey's going to take most of your questions. So as you're typing, you're not going to interrupt me and Doug. You're just going to kind of filter them through Casey. She's going to try to stop us at different points if we have questions that pertain to the slides we're on. And if not, we're going to get to all those questions towards the end till we've left time. As everyone knows, I can talk really fast, so I can do these slides in about 5 minutes. I have 2 other moderators who try to keep me calm and slow me down, so I'm doing my best. They'll keep me on track. We're going to go over all the major areas, you know, the central cost office center and how it's dealing with the CARES funds. Obviously, capital fund, public housing kind of linked together. They're in a PIH notice. And then there's also the voucher program by itself in its own PIH notice also. So we're going to cover those major 4 areas and then just any other questions you might have about the CARES, but that should be the main areas that we cover today. So we just started off here. I just want to kind of remind everyone back to the beginning where they're going to start with is just reasonable costs, because that's where they're going to start from. They're going to start from the CFRs 200.4 and just go, hey, is this cost reasonable in its nature and its amount, doesn't exceed what a normal prudent person would do in these circumstances. That's our overriding factor. My joke is always about going to Tahiti with the extra money. So same kind of idea is that anything that's reasonable and necessary for whichever program you're in is going to be an allowable cost. So we just kind of keep that in mind. They're going to compare, you know, market prices, making sure you're not paying, you know, some exorbitant price, that you acted with prudence, you're not just spending money willy-nilly. HUD is encouraging you to spend this money because they want to get more of it. So there is an encouragement to spend the money, but, you know, it still has to be done in a prudent and effective manner. And then you don't want to violate any of your policies and procedures. A lot of times I get questions about procurement. And the procurement part, you have usually an emergency procurement policy in that manual. And so you can go into emergency procurement policies for hiring these different things we're going to talk about today. I'll give you that one, Doug. That's your favorite topics.
Okay. So yeah, UnderPick Notice 2020. Can you hear me? Is it? Okay. I don't know if it's presenting me, but okay. Yeah, UnderPick Notice 2020-07, they outline the allowable costs using for your, we're calling it PPR. You got preparing, preventing, and responding. If you want to go to the next slide.
So on this one, the only thing we really wanted to make sure that everyone knew about on this one was that the period of availability or performance timeframes. So normally you're used to getting your subsidy money or your HCV money and it just rolls in and you spend it and whatever's left over or used up from the last period kind of gets rolled into your equity. This funding is not that way. Be very careful. This is this cannot be rolled. This is a use it or lose it. If you spend $10,000, you can pull down $10,000. And we'll talk about how to do that on HCV side because it's a little different. HCV, they're dropping the money into your program, so you need to track these expenses. So we're telling everyone pretty much treat this like a CFP program, right, on the public housing side. If you spend money on it, draw it down and record that amount of money at that time. I just saw a notice today from a regional office saying do not draw down 100% of the money if you haven't spent it. So if you spent it all, great, then go ahead and pull the money down. What they're saying is do not go in there and just pull down $8,000 if you haven't spent it, because you're not supposed to be holding on to this money. Even if you're planning on spending it, they want you to pull it down. It's in the ELOC system, pull it down as you spend it. And then of course they don't have any accounting and remittance guidance yet. It'll be forthcoming, so spend it now and we'll figure out how to account for it later. And this is a big question I get from everybody over here. This starts May 1 and goes forward till December 31. So if you spent money back in March and April, currently, technically, it's not allowed to be charged to this contract, the CARES contract. Now, what I would tell you to do is hold that money off to the side, record that expenditure somehow so you can come back to it, because I know there's a lot of pushback trying to get them to backdate this back into March when you would have spent most of your money doing what Doug was talking about, preventing and preparing. There's not much to do in preventing and preparing right now. It's already here. So we'll see if they push it back or not. But the technical answer right now is if you spent that money in April and March, it's not an allowable cost. And then one last thing on this slide is that HUD can extend this 12 months past December 31. So they can extend it another 12 months if they want. I don't know. I'll let you jump in this one, Doug. Anything that says that PPR, I'm just gonna let you have.
Okay. Yeah. So just to add on to what Chad was talking about for the period of performance and the pulling down of the funds is you're going to want to not draw down your funds until you've already incurred the expense. We're going to go with the Treasury rule of the 3 days. So if you do pull down the funds prior to expending them, you have 3 days to pay those costs. So for the most part, you're going to want to be expending those funds first, then drawing down out of the ELOC systems for these supplemental grants. On the grants, you're going to see on the ELOCs that it's going to have a little C at the end of the grant name. That little C is your identifier that lets you know that that's the coronavirus grant. And you're going to get one for, I believe every AMP is going to get its own grant funding. So every AMP is going to have its own supplemental funding for coronavirus. So if you plan on using those funds, it's been recommended that you use one grant at a time instead of saying, okay, I bought some PPE for AMP1, I bought some PPE for AMP2, I bought some PPE for AMP3. I'm going to draw a little bit from AMP1's grant. I'm going to draw a little bit from AMP2's grant, right? Instead of doing that, this emergency fund money is completely fungible between the AMPs. So I would say to make your life a lot easier for tracking this, start on AMP1 or whichever grant first and completely draw those funds down first before you start hopping into another ELOC and drawing down those funds. And then so you draw the funds down and you can spread it to the different AMPs using your excess cash, I think is what people are recommending, Chad.
Yes.
Yeah, so you have the FDS line excess cash transfers. So if you're pulling all of that COVID funding out of AMP1 for right now, but you're using it for the different AMPs, it's going to be, I forget the line, but it's the excess cash transfer line is getting recommended. They don't have any guidance on what line you should use, but that's what's getting recommended right now before we have all of that out. So when we're talking about preventing, preparing, and responding eligible uses of funds, we're talking specifically about the supplemental funding that's coming to the different AMPs, right? So I don't, on the presentation, do we go into how you're allowed to use operating funds now for capital funds? And
no, I didn't put that. I didn't really put that in there much, but you want to explain that here.
Okay, yeah. So it was ineligible use of your operating funds would be for capital type purchases if you're doing roof repairs and those kind of things. But HUD has granted a waiver to say if you need to use any of those OFND funds from your AMP on capital projects, you're allowed to do that. So there's a waiver there. And I saw in the slides later, Chad's going to talk about 1406 and 1410 on your CFP funds. So they completely waived all of the limit for your 1406. So you can completely 1406 your CFP funds into your operating and use those on a needed basis. So those are your already active grants. That's not the COVID funding. So there's a lot of waivers that the HUD is granting until the end of the year for that kind of stuff. So yeah, like I was saying, you're going to want to look in PIC Notice 2020-07, and a lot of this stuff for the preparing, preventing, responding, the eligible costs are explained in there.
The only thing I had to add here, Doug, too, is an important one. Is that second bullet point about being careful. Don't duplicate these. If you went and got FEMA monies for the emergency and you're using that, obviously you can only count an expenditure once. So don't count it as a FEMA expenditure and then turn around and count it as a CARES fund cost too. Pick and choose which one you're going to use. That's probably for our larger housing authorities that might get FEMA money, but just be careful not to double dip. That's a really bad thing from an auditor. We don't like double dipping. That's a bad thing to do.
Right. Yeah. And I heard it discussed that if, because of the period of performance that starting in May 1st, going to the end of the year, that can be extended. People are like, we were already expending this stuff in March to get ready. Why can't we use this COVID fund? Well, for right now, if you do have FEMA funds or those type of emergency funds, that's what you're going to want to use for that very first, those first few months for right now until we can get HUD to agree that, hey, they got to roll this back. So.
Yeah, and just be careful. Don't count twice if they do let you roll that, and you charge it to FEMA, and then you turn around and try to charge it to CARES. It's going to be a big problem.
Correct. Okay, so let's go to the next slide, Hannah. Okay, so everyone can go read this in the PIC notice. So I'm going to kind of go over them pretty quickly, and I'll kind of identify the ones that I think are going to be the big hitters. So category 1 is preparing. So CARES Act funds may be used prior to a local coronavirus outbreak to develop processes and procedures and begin to take actions designed to help keep people healthy, reduce exposure to coronavirus, and slow the spread of the disease, including but not limited to, and they go through and they have 6 different key points. If you can go to the next slide, part 5, childcare costs for residents so they can continue to work, and childcare costs for staff performing essential functions as defined by the state and local governments to the extent that they would not have incurred otherwise. So if you have residents that have to go to work, you can cover their childcare costs with this money. And then if you have employees that are having to do overtime or working outside of the normal course of business that they're used to, you can use this money to pay for their their childcare costs. So, and then any other reasonable, of course, at the end they add any other reasonable costs for preparing. Okay, so next slide, preventing. So during coronavirus outbreak, PHAs may use funds to prevent the spread of the virus to staff, residents, including but not limited to. And this one has 7 different points. And this is all usual stuff. I mean, putting up, plexiglass screens, doing telecommunication, that kind of stuff. If you go to number 6, so on the next slide, I believe. Yeah, so this one I think is going to be a big one. Payments of salaries of PHA staff unable to work because coronavirus public health restrictions. Office management staff who cannot go into the office and cannot perform work remotely, or payment of full salaries of PHA staff forced to work part-time because of lack of childcare. So these funds are able to use that. That's going to be a big one, in my opinion. What do you think, Chad?
Yeah, that's the one, and that's probably ones we want to point out. Some of these other things are pretty evident to you. These are ones where people get kind of a little bit nervous about, but it's specifically laid out in here that you can do these kind of things. So these are allowable costs. They laid them straight out for you. There's no gray area on these. I'm sure we'll have a list of gray areas at the end we're going to talk about, but these ones are specifically allowed. So if you've got workers who can't come in, they've got, maybe they're elderly. I know I have some that have elderly accounting people, and they just basically said, go home. We don't want you working here. And they didn't have any remote process for them, but they're still going to continue to pay them. These would be chargeable to the CARES contract.
I have a question about the child care cost.
Okay.
So what about during the summer months when the kids would not be in school anyways? This person plans to reject those requests because those would be normal costs anyways. Is that what everyone else is doing?
Yeah, that's the one thing it's supposed to be something above and beyond what you normally do. So if you have a history of that person having childcare costs that they're incurring because it's the summer months, I think HUD's going to be kind of liberal on that. So I think if you feel absolute, no, I'm not going to pay that, that's fine. But I think they're going to be kind of liberal on that one and saying, look, I'm not going to take a particular situation and say, when does a normal summer start or stop? Because we don't even know when summer starts or stops now because everyone's out of school. So when does summer start? When are you going to stop paying their childcare cost? I would say that HUD's going to be very liberal with that part. So I would let those costs go through.
Yep. And then lastly, so category 3, responding. So yeah, this one has some weird ones in it. So kind of along the lines of one of the questions that I've already seen that got posted. Could you go to bullet point 4? So this is along the lines of one of the ones that I saw that was posted is cost to facilitate and coordinate with local schools and local governments receiving funds from the Department of Education for the education of students in public housing households. So for internet connection infrastructure and tablets and other low-cost computers for students. So I saw the question before this webinar started that, hey, you know, I'm gonna set up this whole internet, you know, infrastructure. I'm gonna set up, you know, maybe a computer lab for them to go to. That's okay for right now because I'm gonna be funded for that. But, you know, what am I gonna do, you know, in the future with this? You know, do I have to keep, since I set that expectation and I'm funding it, we have to continue funding it even though there's no more supplemental grant revenue coming in. And so, yeah, I mean, that's a tough one. I would guess that, you know, it's going to be temporary. You have to set something up temporary. I mean, they're not going to fund that forever.
Yeah, so that one, I would say there's going to be some sunk costs that you can just bury into the grant. So if you're buying computers and laptops and those things, you don't have to worry about a continuing cost with those. But I know I remember reading the same question Doug's talking about. People were concerned about someone to maintain that lab and the infrastructure inside of it. And I don't know where you're going to end up to pay that person from whenever this funding goes away would be the concern.
Right. So you're gonna have to be careful with that because, yeah, COVID isn't going to go forever, and they're not going to continue funding that if you do set that up. So,
but you could find you might be able to find another funding stream too. I mean, Department of Education might come through and say, you've got a great, you know, learning center here. We're going to drop money into it. So I don't want to discourage you from doing it, but that's a good question and a good thought process to think about is, hey, we've got one-time funding. So definitely purchase the equipment, don't lease it. You know, do things like that where you get those sunk costs taken care of and minimize your ongoing costs. So if you have to cover that with some other grant funding, it's not going to be, oh yeah, we've got these lease payments and all this other stuff. You want to definitely purchase all the infrastructure you can.
right. And then kind of the last thing I want to talk about on this one is that I noticed that on for bullet point 3, expenses incurred because of coronavirus restrictions impacting PHA operations, transportation expenses for PHA staff who rely on public transport that's no longer available. So, I mean, this is kind of some of the questions we filled already is that, hey, does that mean we can buy a car with this money and use that car to be transport? So you want to talk a little bit about that one, Chad?
Oh yeah, throw it to me. Of course, you want me to be the bad guy. We would suggest not doing that. I would be looking to pay more like for Uber rides if you can't get Ubers, renting a car, maybe to use it that way. You don't want to sink a big cost in something that's going to go away. So those people are going to go back to riding. You're not going to, you know, do ride share for the rest of, you know, infinity. So I would stay away from those items. One of the best examples I heard from somebody who called me and asked me and said basically, look, we weren't able to get and secure masks for our maintenance people. And we have a lot of, you know, public housing units that need repairs. So they went out and contracted with a construction company or a repair company that did have the masks. And those people were going in and handling the in-house repairs and maintenance, and their staff was handling the outside where they didn't have to be around the tenants and worry about spreading it because they didn't have masks. Of course, those people who are the extra contractors, those are totally chargeable to the CARES money, and then your normal staff members will be just charged to your normal operations. Don't mix and match those. They're doing the normal business, and these contractors are doing above and beyond items that you're doing. Someone else said something about we close our office and now we have weekend cleanings because of this. Yeah, anything that you can show that I'm doing this because of the COVID restrictions is going to be an allowable cost, and they'll be pretty liberal on that. But again, you don't want to push it too hard, because I've heard rumors that the field officers are going to come audit this stuff, not just the auditors. You're not going to just be dealing with Doug and Chad. You're going to be dealing with us, and then we're going to be dealing with, hey, we already saw that, you know, OIG came behind us here and they were complaining about these items. So it's going to get, you know, picked on, I think, a decent amount. This money's not just free and clear and spend it however.
Right. I mean, documentation is very important. I think it's a 5-year
Look back.
5-year window that you have to hold on to that documentation. So any money that you spend right now, just be ready for HUD or the OIG to come in 3 years and want to take a look at all those expenses, and you have to have all that documentation ready for them.
Yeah, and as we go through the slides, we're going to give you some hints on how to do the accounting and some of the documentation.
Right. Okay, and then lastly, let's just take that last ineligible cost slide.
Oh, I don't think we're at that one yet. That's at the very end. I moved that one to the end. Sorry, Doug.
All right.
So here's where we're talking a little bit about the COCC didn't get any of its own funding. There's no COCC pot of money, but they did. Another waiver they put out there is that you can charge up to 50% increase in your allowable costs. So your management fees can be increased by 50% to cover these costs. Now, this is going to add some tricky accounting, because you're going to charge, I'm just going to make easy numbers for my life because I'm not that good at math, $10 for your project management. Now you can charge $15 per unit. That extra $5 has to be accounted for in your COCC. How did you spend it? Right? And so when you get done and you do all your expenditures and say, this is all the extra money I spent on my COCC because of the COVID money, you compare that to the amount of extra charges of program fees you had. And if there's an excess amount, it needs to be sent back to whoever paid it to you, public housing, HCV. So I don't know, I probably wouldn't run too much through my COCC because it's probably the hardest one to account for when we're talking about this. But we want to make sure you understand everything that's out there and available to you. So you are able to charge up to 50% increase. You just got to track that money and show where those extra, and that my example, $5 was spent on COVID related expenditures. So that's an allowable expense at that point in time. But you can have capital fund, Doug. That's your favorite program.
Okay, yeah, that one's so fun to account for.
Already.
Right, and so this particular slide is talking about the waivers that HUD's issuing as far as the allowability on your capital fund programs right now. So until the end of this year, you are allowed, that they're completely lifting the 1406 limit. So if needed, you can fully draw down those capital funds to pay for your operating expenses for the different amps. And then also they're increasing the management fee that you're allowed to charge, your 1410. The prior threshold was 10%. You're allowed to charge 15% for that one. So yeah, and so after December 31st, as long as they don't extend this, but as of right now, December 31st, 2020, everything is going to revert back and you won't be able to utilize those waivers anymore. So, and then they're also talking about, or they're adding new BLI budget line items to the CFPs, one for preparing for coronavirus, preventing, and responding to coronavirus.
Yeah, no more detail than that either, just those 3 lines. I mean, they're not going to break it down any further than that in the CFPs, is what they said.
Yeah, so far, yeah.
And then this one's for some of our larger housing authorities. You want to definitely keep track of all of your CARES money you're spending, because there's a threshold at 150 that has all this extra reporting that's required. So as you're pulling down money for CARES and you're pulling it for, public housing, HCV, transferring some of that over to the COCC, you've got to design some way to track it so that you know the total amount of CARES money that you've spent. And you'll see in one of our slides, we suggest just making a whole new fund. So we're going to talk about that and some of the reasons why you might want to do that. Because once you hit the 150 threshold, you have to report this information 10 days after every quarter. So each quarter end, you're going to have to report this information back to HUD. A lot of it's not that big a deal. Where I've seen most people spend their time talking about is that very last circle, the jobs created and detailing informations on subcontractors. So if you're going out and you're spending a bunch of money and you're creating jobs and hiring subcontractors to do different things, be aware you're going to have to report that information that you're not used to doing. That's usually not something that housing authorities track. You don't have a system in place for that. So be aware of that. Now, if your total CARES money is $110,000, you don't really have to worry. You're not going to be able to pull that down more than 150. But I have several that got a couple $100,000 that if they spend it all, they'll be subject to this reporting. And of course, is HUD still coordinating with OIB exactly what details you're supposed to report? But I'm supposed to tell you that, you'll have to report this information once you pass the 150 threshold.
Back to the management fees, we have a question. Does that increase include all three, the management fee, bookkeeping, and asset management?
Yes, and even the CFP, if you go back to that slide, there's 4 of them on there. So all of them can be increased 50%. I think it's one more back. Oh no, so you're right there. You're right there, Hannah. Sorry, you were right. So all 4 of those, even the CFPs. That's what that. If you notice that Doug was talking about the BLI and got raised up so that they could charge more CFP fees. Just be careful because those are a pain in the butt. I mean, you got to track that extra. You almost got to track that revenue, almost like kind of like we do HCV, like admin versus HAP, and keep track of that extra money. And I generated this much extra money in my COCC, and I had these extra costs that offset that revenue to get to 0.
Right. Yeah. That money doesn't get to go to your equity. You don't get to keep that in your reserves, in the COC, any of that. If you're increasing your management fees, then you should be spending that money.
So then we have a couple suggestions here, like you can either augment your chart of accounts. This depends on how much you're going to spend and how much detail you're going to go into. So obviously, if you're going over that 150 threshold and you're talking hundreds of thousands of dollars in CARES money, I would suggest the right-hand side of your screen, creating a new general fund, treating it like a new federal program, pretty much, set up a cash account, and show those expenditures, because then we can take that apart and put it into public housing or Section 8 or wherever we have to report it under the FDS. But that would give you a good read on where you're at with how much money you spent on CARES and keeping track of that. If you're just going to do a small amount, not going to have a lot going on, if you're one of those ones I've talked to before, it's like, hey, it's May 1, I've already done everything and there's not really anything left for me to do. I'm going to incur some small costs. You might want to go to augmenting your chart of accounts. You don't have to use our numbers. We just made up a series, obviously it's COVID-19, so we use 9, and then 1, 2, 3 for prevent, prepare, and respond, and then just add it to the end of your 4-digit account numbers. We just use the standard HUD chart of accounts for $14.99 for capital assets, and $14.90 maybe for your general expenses. Salaries, obviously break out salaries and benefits. Don't just lump them together. We're going to want those spread out because we're going to try to reconcile the 941 back to your expenses. And of course, if you lump all that stuff together, it gets really complicated for us going, oh yeah, well, we charge on over here, not in salaries. That's going to mess us up. So, just put a decimal point behind it and charge the salaries to a salary line item, but with a code at the end so we can pull up how much we spent on COVID in those different categories. And then this is a slide just talking about the funding is different if you're public housing versus HCV. Public housing, again, we're saying treat it like CFP. So they're setting up a ELOC for you with about 2 months worth of your subsidy sitting in there. I know it's not exact, but that's the estimated number that they're throwing out there is how they came up with the funding streams. And don't draw unless you're spending it. I just said, like I said, before I got on this conference call, I saw an email from a regional office saying, do not draw down the full amount unless you can justify the expenditures or you need to remit that back to HUD, which will also just cause you headaches because we don't even know how to remit it back to HUD yet. And like Doug said, it's 100% fungible. So like he was saying, use AMP ones first or whatever, pick the biggest one, use it first, and then go to the next one and just funge it across the public housing. Now, when I say fungible, it doesn't say you can send it to HCV. Fungible means inside of your AMP. So if you have just one AMP, ignore what I said. You don't have fungibility. But if you have multiple AMPs, you can go across. And another big point I want to make on here is that if you have tenants who are getting unemployment now and they come in and change their 5058 and lower their rent, say they were paying you $100 a month and now suddenly they're only paying you $0 because they have no income, make a schedule of all of those and you can draw those funds down. So you got Bill at 100, you know, that he shorted you, and Sally shorted you another 100. You can add all those up and draw those COVID funds down and recoup those lost rentals. And the important part to tell you then is that on the HCV side, that's not what happens. So if their HAP goes down, you can't use the COVID funds to change those HAPs. You'll have to use your reserves in your HAP funding because the HAP money, the COVID money you're getting is for admin, not HAP. I don't know if you want to add anything in there, Doug, on that part.
Yeah. So on the AMP side, if you have public housing and the AMPs, at the end of the year, you shouldn't have any 113 cash. You shouldn't have any restricted cash. You shouldn't have drawn down more cash than you needed. You should have incurred the expense and then paid that. On the HCV side, they're sending the money to you. They're going to send that money to you monthly. You got to put that money in 113 and you hold on to it until you know you're using it for eligible activities. PIC Notice 2020-08 talks about your HCV admin fee, eligible, ineligible activities. There's a slide later we're going to show that lets you know where on HUD's website you can go find a list that they're updating on what's eligible for HCV admin fees. They haven't put out guidance. They're working on it right now because I think only half of the funds for the HCV program have been released, and those are for the admin side. They're working on PIC Notice for the HAP side. So that hasn't been released yet. They're just worried about making sure people keep their jobs, and you know that the programs are still running now. They're working on the HAP PIC Notice, so that those funds haven't been released. All of these HCV funds are for admin strictly.
And not to my knowledge, Doug, I had someone call me and ask me, said, hey, my HAP client, they can't make their portion of the rent. Can we cover that? Not to my knowledge.
Yeah, with your admin fees, I don't know. I'm thinking that it's going to come out with the HAP guidance, the PIC Notice on HAP.
I have a question for, would lost rental income before May 1st, 2020 be eligible or only after May 1st?
I would say only after May 1st right now, because that's when they're only allowing, that's pretty much the only time they're allowing you to spend this money is May 1st going forward. I would go back and build that information. So if they do come back and say, hey, now we're going to push it back to March 15th, you're ready to go. You can draw the funds down, boom, you're done. And not scrambling around trying to figure it out, especially if they do it somewhere like in November, December before the funding's about to run out. So I would go create that information, have it ready for a journal entry and be able to pull that money down. But currently you cannot pull that money down. I think we got one more slide and this is Doug's favorite one.
Yeah, I mean, you can log directly into, so that link at the very bottom, that'll take you to HUD's website, and they're updating that routinely. I don't know if that means daily, weekly, hopefully daily, that'd be nice. And so housing authorities are sending in their questions of, hey, is this an eligible cost to use for my HCV admin fee, my extra HCV admin fee? That link right there, Financial Management Center at HUD.gov, that's who you're going to want to email your questions to. If you don't see your question or your activity listed on that link at the bottom, then you're going to want to email those guys and let them know, hey, this is, you know, this is one of the activities that we plan on spending this supplemental admin fees that you guys are providing on. is this allowable, not allowable? And hopefully they take that information and update their list with it. So, and you can go to, I would go to that list at the bottom. That's the most up to date, but because PIC Notice 2020-08, that's already kind of outdated. They're already adding more stuff to that as we go. So that's going to be, that'll be your key to know whether it's eligible or ineligible activity to spend those monies on.
I have one more question. What are your thoughts on hazard pay?
Yeah, I think that's, I mean, that's an allowable cost. So if you have hazard pay, the only problem is the hazard pay to only be allowable May 1 forward. So I'm sure they had lots of hazard pay before that if they were, you know, your employees. So just be sure it's after May 1 until they change that date. You know, I'm like 80% sure they're going to probably push the date back, but it's just a guess. I don't have any guidance or anything from HUD saying they're going to do it. I just know they're getting a lot of pushback, not just from my clients that are talking to us, but every seminar I listen to. That's everyone's biggest concern is incurred a lot of costs before May 1. Why can't I charge these back? But their basic answer is the law wasn't signed into place until I know the law was signed into place back in March, but the actual funding law and that wasn't signed until May 1. So that's the problem that they're facing. So they got to find some way to get a waiver for that to allow those costs. I understand your frustration. I'm right there with you. But yes, I would hazard pay after May 1 if they're doing something that you can justify as outside the normal scope of what they're normally doing, and you're paying them a hazard pay for that, which could be just coming to work right now.
Yeah, and then sorry.
There was another question about hazard pay. What employees are eligible for hazard pay?
They don't have a list of them, and to be anybody that you deem to be doing something that's justified as hazard pay. So just be ready to defend it to me and Doug, because we're going to ask you the question, like, what they do, you know, if they're, you know, obviously not going to pay someone hazard pay from working from home remotely. So don't do something, you know, anything reasonable is going to be a cost that they're going to allow. So if they're coming in the office and you deem that as a hazard pay, you know, because they're essential employees and we haven't been released, it depends on state by state too. I've got people on here from all across the US. We have different levels and different phases we're all in. So I can't give you a straight answer because some states are more open than others. And so you might say, well, this state no longer has really hazard pay associated with it because we've opened back up. Whereas more restrictive, say California, hasn't really gone in. I don't know if they're even in any of the phases yet. If they're going in the office, they're going in as, you know, employees and under risk for that. So that could probably be charged. Even your admin people and things like that probably could get hazard pay for that.
Right. I think the reasonableness is very important. And then also make sure you're following your policy, your payroll, your pay rate policies. Make sure, I mean, if you're the executive director and you say, hey, I'm coming in the office, I need hazard pay. Yeah, call up your payroll guy and say, you got to pay me more for hazard pay. You probably want to go through the board, make sure that's approved by the board. If you want to, you know, if employees need it, make sure you're signing those authorizations, make sure that's documented in accordance with your policies, with your controls. You don't want to circumvent your controls. Make sure you're following your controls and documenting that information.
Yeah, I know a question wasn't on here, but someone asked me too on another, just an email about buying their board members iPads so they could have board meetings because some of them don't have laptops with computers or don't even have laptops. I said, you know, that's fine, but you better make sure you had board meetings in May, June, and July, you know, and not just bought iPads for somebody and not had any meetings. So you can justify it, make sure you're using it too.
We have a couple more questions. We're going to wrap it up, but I know that Chad and Doug, we're going to stay just to answer any remaining questions. So if something wasn't answered, feel free to submit it into the question and answer.
Yeah, we'll stick around a good 10, 15 minutes. Nowhere to go.
We have one for public housing low rent. Could we use the CARES money force account for move outs after May 1 to pay maintenance to make ready the unit and deep clean?
Oh yeah, for sure. That's an easy sale. You see any problems with that, Doug? I mean, that seems like an easy slam dunk one to me.
Oh yeah, of course the cleaning for sure. The cleaning And I mean, it could be, you could be, as long as you're documenting it correctly and you're saying, hey, they had to move out because of coronavirus. I mean,
or even if they weren't even, if they weren't even positive, I would say, you know, you can show that as preventive. You know, you're being preventive when doing, you know, above and beyond. I would say if you do your just standard cleaning, which I wouldn't recommend in the first place, but if you just do your standard cleaning, then probably not. But if you're going to go the extra mile and do a little extra cleaning, then yeah, charge it to the COVID contract.
Yeah, I was just saying, if the tenant left the apartment in shambles and you have to go through and you have to redo all of the walls and all that kind of stuff, I mean, that's where you get into the gray area. Is that going to be a normal cost just for a unit turnaround? Or are you going to charge it to COVID because, you know, it happened during this period, so now I'm going to use the supplemental funds to pay for that unit turnaround? That's why I was saying the cleaning, yeah, that makes sense. But I mean, are you charging to repair all the electrical outlets that they broke and stuff and things like that? So
yeah, that would be the area. You might have to do some kind of split, or you may do like that one housing authority have. You may be hiring out a separate contractor because you're not comfortable going into that unit because they were COVID positive. And so you're hiring a separate contractor out. Then I would say, yeah, now you got an easy chance probably to charge that because you are incurring a different cost than you normally would.
Another question, just to clarify, the date of availability is May 1st and not April 28th, correct?
Yeah, there's back and forth on that. The last I heard was May 1st. I know some people are saying April 28th also. If you've got an expense that's on the 28th, which is what I think 2 days, and it might not even be weekdays on there, probably not going to get a lot of argument from us on those parts if you're getting that close to cutting the hairs. But if you're trying to charge March expenditures, that's going to be a problem at this point.
A question that came in is question for the HCV program CARES Act admin fees. I purchased 20 Zoom licenses for our staff to utilize for meetings, briefings, appointments, reviews. Only 18 staff are home cost centered under the HCV program. Can admin legitimately use the other 2 licenses for board meetings and charge the CARES Act admin fees?
I don't see why not. HCV can cover some of the board member costs. You got 2 out of 20. I don't know. What do you think, Doug? I didn't see any problems with those.
nope, no problems.
I mean, HCV's got to cover some of the board costs. I mean, that's a good way to put some of the board costs to HCV admin. And again, I think on the first of these slides you have, I mean, you guys probably, almost everyone in this conference is our client already. You have me or Doug's email address anyway. You probably have our cell phone numbers. If you think of something afterwards too, feel free to shoot us an email. You know, we'll shoot you back what we think or give you a call if it's something complicated we need more information on.
A couple more questions coming in. How stringent do we have to be when asking for verification of cost of transportation, childcare, etc.?
How stringent? Yeah, that's a good question. I mean, I would think you generally know that. I mean, I guess I'm trying to think of the situation without having to ask them the exact situation. But you know, if your employee generally had kids in school and now suddenly they're not in school and they're asking you to pay their childcare costs, you have a history to go on showing that they've never had childcare costs in the past. But it's getting hard. I understand where you're coming from because that's kind of a lot of personal questions to start asking. We have all of these issues we keep bringing up with HIPAA and stuff, like how much can you ask without getting yourself in trouble? So I would say if in doubt, you know, it's an allowable cost, I would err on the side of paying for childcare for employees who maybe are circumventing the system, but don't let them outright circumvent the system, but don't interrogate them either. So I guess use your best judgment on that of saying, you know, I asked, they said they needed this, it was COVID related, I'm done. I'm not going to ask for positive test results or anything like that. That'd be way too far.
We've received quite a bit of HCV admin fees. Any suggestions on how these can be used to support program participants? HCVP admin fees.
If you're talking about PBV, they say PBV, Casey?
It just says HCVP admin fees. How they can be used to support program participants.
Well, Doug, is there anything that, I'm not sure that those funds can be used for the program participants.
Yeah, I'm not, I'm not sure what that question is alluding to
The
exactly.
only thing I could think of that might relate to that is, yeah, HCV funding came with project-based vouchers. And so that part, I could see where you may be doing something for your project-based voucher people. But if they're standard HCV landlord-tenant relationship, I haven't heard anything about what you can do for them. Maybe you can email us a little separate on that one and just tell us a little bit more about what you're thinking about trying on that one, because I'm not really following what you'll be trying to do for that participant.
Yeah, we're currently having split shifts with some employees working 3 days, 10 hours per day, still paying them for 30 hours per week. Is the 10-hour differential reimbursable?
Still paying them for 40 hours per week.
Yeah, so they're paying the 40, but they're only working 30, and they're asking
Right.
if they can charge those extra 10 hours to the COVID. I mean, from what you read, Doug, on that slides, it sounds like yes, you can.
Yep, that's what that money,
That's what it's for.
that's what it's intended for, exactly.
Now, one thing I will say on those HCV funds, be careful because they are coming down. Like you said, they're dropping them into your bank account. I don't think we put slides up there, but I think I did, but I went over kind of quick, is I would recommend that when that money comes in, this is all the accounting nerd people, put that in deferred revenue until you incur the cost, then recognize that revenue. But before that, I would be deferring that revenue, kind of like when you get HCV a couple of days before the month end, I mean, beginning of the month, that's deferred revenue too. So hold it until you actually spend the money so that if HUD asks for it back, it's not in your income statement. It'd be sitting on your balance sheet.
Yep, exactly. And for that stuff, we've kind of already mapped out what some of that stuff would look like, as far as we're not going to have your specific account, but as far as what FDS lines you should be hitting when you're doing that accounting, we kind of have that already mapped out. And so I don't know if that's something we plan on just blasting everybody with, or whether we'll just retain a copy of that. But some of the, you know, the tedious accounting of it, what you know, account does this go into, and then when I spend it, what account does that go into? We kind of have that mapped out. So that's something that we can provide guidance on for sure.
Another question is, I know we're able to pay childcare for staff who are working, but we have children out of school due to COVID. Are we able to pay staff who chooses to not work and stays home with their children? If yes, are we able to continue to do so during the summer months when children are normally out of school anyways?
Yeah, that's going to get that line. I think while they're supposed to be in school, you can charge that cost. As it goes forward, I don't think they're probably going to say no. The summer months you normally would have had to have some other figuring. But again, that's going to get complicated when you say, when does the summer start? So you're going to have to pick some arbitrary date where that's going to kick in. But when they're staying home with their kids, I think that's one of the things they're saying is that they can't come into work. That's a COVID related item, and it's allowed to be charged to the COVID contract. Did you get through your whole list, Casey?
That's all we have for now.
Well, like we said, I'm sure you'll have lots more. I'll let Hannah wrap up because she's got a lot of admin things she's going to tell you about where we can get it, where you can get this from, and what we're going to do at the end.
Yeah, thanks so much, guys, for joining us. We are super, super excited that we are able to do a webinar, and hoping that in the future we'll be able to do more of these. So we'll see. Just if we want to keep doing these, let us know what you thought. Feedback always helps. And You will be posting this online. We recorded it. I'll be emailing the slides to everybody. And if you have any questions, you can reach out to our main email, or you can reach out specifically to your auditor. That way we can get those answered for you.
All right, thanks, everybody.
Thank you, guys.
Thanks, guys.